to the advanced section of order flow strategies and execution, where we'll be looking at a trade in the gold market. And rather exciting, is actually one of our traders that took on this trade. So it's a recording from his screen and his live execution of this trade in real time. So let's have a look. Now, the area we're focusing on in this advanced section is on the reversal, and so this area over here, reversal and momentum type of execution order strategies. And the type of trading strategies we're going to be looking at is a confluence of a few: blowout, attack, reversal. So any of you, those who've forgotten, go refer to the notes on blowout, attack, reversal, and the reversal and momentum section. We'll be also looking at a volume slam dunk play, and that's actually what we see one of the traders trade live in this video. And then also the hunter, another strategy that could have been employed in this. So all in kind of one trading strategy executed in one market. And the market we'll be looking at, I'll show you in a sec. So let's have a look. So the market that we're looking at is gold. So we're going to be having a look at the gold market, the gold futures, that is. And the plays, as we mentioned before, is a momentum and sorry, let's just make that a little bit neater. So we're going to be looking at momentum and reversal. Let's also minimize this. So we'll be looking at momentum and a reversal type play. We'll be looking volume slam dunk, the hunter, the blowout, attack, reversal, the trading strategy. So three strategies we'll be looking at. Pyramiding with a strong underlying bid, passive stop order, and then a littered reversal offer with an aggressive scalp. So if you remember, when the market shifts up and hits some stops, then how you can actually find a trading strategy around that. The type of environment will, for a volume slam dunk, you actually want a high volume leading into the breakout, but for a hunter play, you don't need a high or low volume, you just need a passive entry. And then the blowout reversal is kind of as the market blows out, hunter stops down, you have an illiquid panic. And this will be made a lot more clearer when we look at the video. The risk management for the first play, we're looking at 5 to 10 ticks. That's for the volume slam dunk. For the second play, the passive stop order, again 5 to 10 ticks. You can sometimes get out for 1 or 2 ticks on this one, because it's a very, the hunter, you're just either looking for a stop or you get out immediately. And then the number 3, scattered 3 to 9 ticks. What we're looking at over there is how you scatter your offer, and we'll be looking at that in a moment. And then your reward management for both 1 and 2 is 20 to 50 ticks. Especially in your illiquid markets, the markets that have stops, gold, even some esoteric commodities. And then your reward management for the blowout reversal, you're looking at 3 to 20 ticks. Now, what we're looking at here is actually identify a predetermined level in the gold market, which is 12.3572. This is a 5-minute chart, as you can see over here. Okay, so we're looking at this key level over here. You can see it was tested multiple times over here, and then it just came short of it over here. Tested it a few times, and what was actually happening, there was a bit of an iceberg order over here. So we're looking for a stop above this level, this predefined, predetermined level. So now let's go have a look at the video. Okay, so let's just make the screen nice and clear over here. So this is one of our traders on the trading floor, and what he's doing over here, where I want you to focus your attention, is on this ladder right here. So this is the gold futures market. So I want you to focus on this over here. Okay. So what we have going on over here now is that the trader at this very moment, he's actually long 11 lots at 23.60 in the gold market. So just give me a sec whilst I try and manage this. Okay, so now what you're going to see for the volume slam dunk play, so we're going to be looking at the first play. Now with the volume slam dunk, all right, what you're looking at is you want to keep a very close eye on the integrity of the bid. If you've identified that level, as we said, at 123.72, so 123.72s, you feel that there could be stops over there. So now you're trying to, volume slam dunk is, you're observing a pickup in the nature of the ladder. You're observing that there's a little bit more integrity in the bid. Now what I mean by integrity is that every time someone hits down into the bid and they're selling into the bid, that the bid starts reloading. You know, so you start seeing, you know, they hit down into it and it reloads, and every time it advances higher, and every time the market tries to offer down, the bid reloads. So you're seeing that the market's holding its ground. As it's moving upwards, the bids aren't just disappearing all of a sudden, becoming quite choppy and volatile. There is an intense buyer, and that intense buyer, you want him to seeing, you know, advancing ground upwards, but holding the bid. So every time they hit into the bid, it reloads. So if they hit into 58s, 57s, and 56, then all of a sudden you notice that the buyer is sticky in 56s. He moves the market up, they offer it back down again, he rebids 56. It advances up, then it advances a little bit higher, comes back down, and they're almost pyramiding. They're almost advancing their ground. So before there was a buyer at 56, and as they shift it up to 60, then there's a buyer at 58. So that's what I mean by integrity in the bid. The bids are holding their ground. So really rather important. That's kind of what you want to watch for. And as you observe the bids are holding their ground and it's advancing high, you can actually start accumulating your position. You can start increasing your size as the market starts gravitating towards the stop zone that you've identified. And that's really the power of the ladder, is the ability, whereas you just observe a ladder on a chart, you might just have one order where you buy the breakout. But if you actually have the ladder and you see there's an intense buyer before a breakout, you can actually increase your conviction in your size and therefore your reward. And this is the power of the ladder. It really helps you determine how much you can really execute into the market, as opposed to a very one-dimensional linear process of just buying one clip. Here you can determine how much, if there's no integrity in the bid, you can actually start reducing your size, limiting your exposure. But if there is really true activity on the ladder, you can start increasing your exposure, increasing your size, and therefore taking as much out of the market as possible. Now with this market, you really want to watch out when it takes out those stops. It moves fairly rapidly and quickly. So let's watch this trade now. Okay, so what I'm going to do is I'm going to shift this. So we're watching the gold market at the moment. So now let's start watching what's going on over here. Okay, so at the moment we see the markets. There's 5, 6, 12 lots. There's 3 lots that's lifted the offer. Okay, now we've advanced ground to 59s. All right, now they've offered it back down again. They're trying to offer 58s, but again they're offering again 59s, but the bid reloads himself. The bid reloads. All right, the trader's still got 11 lots in over here, so he's waiting to see until he sees more integrity in the bid. But you can see the 59s are trying to offer, but they keep on reloading. So let's just keep an eye on this at the moment. Again, so now we're at 60s. There's an offer there of about 31 lots, but you can notice they're just taken all of it. They've taken all of it at 60 lots, and the offer is trying to offer down. It's trying. It's reloaded the offer over here. The offer is now starting to disappear, so it's actually not even holding itself now. So the offer over here is starting to disappear. Well, he's come back in again, and we're watching over here closely. So 16 lots, 59s is still holding itself over here. So we're watching, and the offer, 16 lots has just been bought into the bid over here, into the offer. So we're watching, and quite a few contracts have traded over here. So there is someone sitting there on 60s. Another 50 lots have been have been bought over here. So just keeping a very close eye on this 60. So there's a bit of a battle going on over here. There, it's just been taken. Now you're seeing, so every price they're taking it. Every single price that they're starting to take, and the buyers are reloading. Look how, so the 60s that was formerly offering itself is fading to off. There, just taken 3 prices over there. The trader's just increased his size to 13 lots, 17 lots now. He's gone because he's noticed the buying activity. He's increased there at the stop. So I don't know if you've just seen that at the moment. So I'm just stopping over there. So we've moved. Remember, the trader was long at 123.60s. There was a stop. It stopped all the way up. The traders have got out most of his 17 lots, and he's now gone and reversed his position. So he exited. He had some lying passive exits all along the ladder. He wasn't filled on all of them, but filled on most of them. He then cut and reversed his position, and that really comes back to the second play or the third play, which is the blowout attack reversal. So the market stops down. It stops up, and as it stops up, you get, either you get out of your position, or if you weren't long, then you notice a stop in a market, you litter the offer, and then you start scalping from the short side. As the market now tries to find this new sense of balance. So this is really what we're watching over there. Key is the blowout attack, the volume slam dunk. So as a trader, notice that buyer, and let's just actually go back to it quickly again. So we'll go back to it again. Oh, sorry, that's okay, so let's just, we'll find this over here. Okay, so let's watch over here, and this one I want to bring to your attention. Let's see if we can, okay, no, stop there. So just, okay, so the trader, the moment he saw some volume surging into the market, and he noticed that change. So when that buyer took out, a couple of ticks, he went in. The trader went in aggressively with more size. He almost increased his size by over 50% as he noticed that new buyer just before the market stopped up. So let's watch this again. So the 60s has now been taken out, and then just watch. So he's got 11 lots in the market. And then all of a sudden, we're going to observe when the market just lifts all of these offers over here. So it lifts them, and then the market there, and then the trader starts buying. He starts adding in aggressively at 65s, and then the stop should happen now. So just keep an eye out for the stop. There we go. So it stopped. He's got out of his position, and he's cut and reversed for that third play. He's already put some orders to exit trade. He releases these trades over here, and there he's just got filled on that cut and reverse. And the trade which we talk about is the blowout reversal attack. So that's an analysis of a volume slam dunk blowout reversal attack. You could have also had a passive trade at that stop level, where you could have just had an order and hoped to get filled with the stops and then exit the positions. So that is an analysis of the momentum type plays. So just to really summarize everything up over here, we looked at the volume slam dunk. So volume slam dunk is when you start increasing your size into a level because you observe a high volume or a buyer coming into the market into a level that you deem as a potential stop, which was the 1235s. So what you're doing essentially is you pyramiding into your position, provided there's a strong underlying bid. Then the second type of strategy is a passive stop order. So you're just putting an order just at the market. We showed that in one of our previous stop trades. And then there's the reversal, the blowout attack reversal. So as the market pops out, you then litter some reversal offers. So you litter the order book. So you put an offer over here, an offer over there, an offer over there. You get filled some, you take a couple of ticks there, you take more ticks on that order over here, and that's how you're executing on this trade over here. and we spoke about the risk and the reward management. So thanks very much for this more advanced type of video, more advanced type of play, but you can see how it's how to execute from one of our traders on the trading floor, and how he executed on that trade, and how could you execute on that trade a bit better and more effectively.